All right, this is the GreatStockPicks.com September 23rd wrap-up video or highlight video from the chat. I didn't put one out last night. I didn't have much time. So I'll just, and really only one call worth talking about yesterday. The market's been a little difficult the last couple days, and I'm not sure why. But today, for example, the market gapped down and then just kind of climbed higher almost all morning up until the afternoon. So unless you had a crystal ball and you knew we were going to climb from the open, it was tough to find low risk entries, at least for me with my style. So not a lot of good stuff today, but I will share with you a couple nice trades that we did call. Skechers was one, and I'll scoot over here and eliminate today's candle. You can see nice increasing volume here on this sell-off 3 days in a row. Candles are getting wider. For me, that's time to start thinking about looking for a bounce. And then as you can see, it did get a bounce, but then closed. If you watch the market today, it sold off all after, or at least the last hour there. But I will share with you the call, knowing that Skechers was beaten up like it was, and then today put in this early high. This is all yesterday's trading here, and this is today's trading, 5-minute candles. Had an early high of 21.93. As a matter of fact, let me zoom out a little bit here. This is a long base from yesterday. So the early high of 21.93, and then it was in this kind of tight consolidation just below the high of the day. Above this consolidation, I said if it breaks this consolidation here, it could get through the high of the day, and then if it can get through this 22, that's another thing it would have to contend with from yesterday, it could go. So I called it a 21.89 if it got there above this, with a worst case stop at 21.79. Thinking it could get through the high of the day and hopefully grind its way through 22. So here's what happened. There's the 21.89 trigger, the next 5-minute candle, and then it did get through 22, stalled for a little bit, and then another leg higher all the way up to over 22.40. So that, and again, it was only a dime risk. Here was the trigger, here was the stop. So certainly a nice move, and plenty of time and places to take some profit. So Skechers worked nicely. Tiffany's today just kept, after the gap down, I'll show you the chart here. A big gap down in Tiffany's, but like the S&P, climbed higher most of the day. Finally, in the afternoon, when it did this push up, it had that look of this chart we teach, what we call a potential final push up. And this is one that I actually called as a short right here with a stop right here. And it triggered short. And as it came back up, I went ahead and over the microphone told everybody I was killing it right here, and it would have stopped me out there too. Either way, it was like less than a dime risk. I killed it for like a 3-cent loss. But this is a scenario in which we were right about the idea, and the first one didn't work, and I called it again. I'm not afraid to retry something at 44.95, I believe, right here. With a worst case stop at the high of the day, 45.09, I think. So you're talking like 14 cents. I could be wrong by a penny or two there, but and then this short took us down 50 cents. So I ended up having a real nice trade in Tiffany's after the 3 or 4 cent loss the first time. So it kind of goes to show you sometimes you can be right, get stopped out, and you can try the trade again. I also want to share with you GSK. Okay, when I saw GSK, I didn't use the official announcements feature when I saw this, but I said over the microphone, I did in the announcements add, we're adding GSK to the watch list. This had that look of a setup we teach. Already had a big gap down, sold off here, bounced, and then straight down here on increasing volume. That is a scenario or a setup that we teach to look for a potential long. And I love this little narrow candle here. And the way we play this, it's another what we call a possible final push down. 39.10 was the trigger. Worst case stop, 39.02. So 8 cents risk. Are you ready for this? And again, this was a verbal over the mic. And somebody said, well, in about 20 minutes, they had some kind of FDA decision coming out. And that was to be at 11:30. This was about 11:05. So when I heard that, I said, you know what, that's enough to keep me out of it because I didn't want to be in it when it got halted. But I still think this is worth showing, this setup. Look what happened on the next candle. You saw what happened there, but just kind of grinded higher. That's 5 minutes later. Look what happened in the next 5 minutes. So remember, 39.10 trigger, 39.02 stop. So an 8 cent risk, and look what happens from 39.10. This is not one of those errant ticks. This thing actually ran all the way up to 40.51, and this was still ahead of the decision. And never did get halted, by the way. But that would have been, and we did have members that saw the setup after I pointed it out, liked it, and took it, even though I talked myself out of it because of the pending FDA announcement. But that, wow, what a great trade for some of them. Again, I didn't get it. And since I didn't put out a video yesterday, I also wanted to share with you my trades in Adobe yesterday. Huge gap down. I'm sure you all know this. Look at the volume there, 108 million. Switching to 5-minute candles. We called Adobe, ADBE, yesterday, right here. Worst case stop, right here, I believe. I'll give you the numbers. I believe it was 26.34 with a 26.10 stop. And it quickly here, after the trigger, did get through the high of the day like we were looking, went to 26.51, enough to sell some. The original 26.10 stop held all day, and from 26.34, it did make it to 26.85. But again, not a lot of stuff the last couple days. You know, hoping to get back in the groove tomorrow and find some more real nice setups. But we did have, between the last 2 days, 3 or 4 real nice trades. And a little thing that I've been teaching our membership is if a stock triggers and moves a nickel in my favor and then comes back to break even, more than likely I'll kill the trade. So I'll take a flat trade. Most days I have several flat trades rather than let the stop work if it moves a nickel in my favor first, because you can always re-enter them. Okay, so anyway, I'm going to stop babbling. Just wanted to kind of make that comment about my emphasis in my personal trading is protecting the downside before I worry about how much I can make to the upside. When a setup that we teach triggers and acts properly, typically it'll work within 5 or 10 minutes. You'll know you made the right move. So there's no reason to hang out in them if they don't do what you thought they were going to do pretty quickly. All right, now I'll stop babbling and we'll do another highlight video tomorrow night. Have a great night.